Some experts call whole life insurance one of the most reliable ways to protect your family and build wealth. Others call it one of the biggest financial mistakes that you can make. So who's right? And more importantly, what is whole life insurance? Whole life insurance is a type of permanent life insurance. Unlike term life insurance, which offers the same amount of coverage for a set period, like 10, 20, or 30 years, whole life insurance lasts for your entire lifetime as long as you pay your premiums. Along with the coverage, it also builds cash value over time, which you can borrow against, withdraw, or sometimes use it to pay premiums later in life. Sounds great on paper, right? That's why it's been sold for over a century. But it's also the same reason that some financial experts are very critical. One of the biggest criticisms you'll hear is that whole life insurance costs more than term life insurance. For example, a healthy 30-year-old might pay around $20 per month for a $500,000 term policy. The same person might pay $400 to $500 per month for a whole life policy with the same death benefit. That's a massive difference. Whole life insurance builds cash value, but here's the catch. It may take years, sometimes over a decade, before the cash value grows into any meaningful amount. And initially, most of your premiums are allocated to fees, commissions, and insurance costs. Critics argue that this makes whole life insurance an inefficient investment compared to putting the same money into an IRA, 401k, or index fund. But wait, why do some people still choose whole life insurance? Some people choose whole life insurance because it provides benefits that traditional investments don't offer. For example, for people who struggle to save or invest, whole life insurance acts as a built-in savings tool. Also, wealthy families often use whole life insurance for tax-advantaged inheritance. This is why some experts still recommend it, especially for high net worth individuals or those with very specific financial goals. But if that doesn't sound like you, term life insurance may be a better option. Based on what financial experts say, term life insurance might be a better choice if you're on a tight budget and you need affordable coverage, you're just starting with your finances and still building emergency savings, you want to focus more on your investments, or you're not committed to keeping the policy for life. In these cases, term life insurance plus separate investments might be a better fit. So the real question isn't, is whole life bad? It should be, does whole life fit my goals, my budget, and my financial plan? Consult a trusted financial advisor who can help you calculate the numbers for your specific situation. That way, you can make a confident decision, not based on fear or hype, but based on facts.
If you have questions, please give us a call at 1-855-818-0955 or visit FamilySecurityPlan.com.